Did you know that 90% of people end up paying more taxes than they need to? Most folks don't even realize it's happening. It's not that the government is taking extra money from you. It's simply that you're not making the most of the rules that are already in place. This video is all about understanding how you can use those rules to your advantage. We'll explore the difference between earning money and structuring it, and reveal how smart strategies can help you keep more of what you earn. Let's dive in and see how you can start saving on taxes today. When it comes to taxes, the government sets the rules, but it's up to you to use them. Most people don't realize that there are legal ways to reduce their tax bill. Instead of just accepting what's deducted, you can learn to navigate the system. The key is understanding how tax laws work and how you can apply them to your situation. By being proactive and informed, you can make decisions that benefit your finances. In this scene, we'll break down how the rules are designed and why it's important to use them wisely. Smart people don't just earn money, they structure it. They use investments, write off business expenses, and plan their income to reduce their tax liability. These strategies aren't just for the wealthy, anyone can start using them. By thinking ahead and making smart choices, you can keep more of your hard-earned cash. In this scene, we'll look at how these tactics work and why they're so effective for those who want to maximize their savings. One of the most powerful ways to lower your taxes is through investments. Whether it's real estate, stocks, or retirement accounts, these tools can help you legally reduce what you owe. Investments often come with tax benefits such as deductions, credits, or deferred taxes. By understanding how to leverage these opportunities, you can make your money work harder for you. Let's explore some common investment strategies that can help you save. If you run a business or even a side hustle, you can write off many expenses. This means you subtract the cost of things like equipment, travel, or supplies from your income, lowering your taxable amount. Smart entrepreneurs track every expense and use them to their advantage. Even if you're not a business owner, there are ways to claim deductions for work-related costs. Let's see how writing off expenses can make a big difference. Planning your income is another smart way to reduce taxes. This means thinking ahead about how and when you earn money. For example, you might delay income to a lower tax year or spread it out to avoid higher brackets. By understanding your financial situation and making strategic decisions, you can minimize your tax bill. Let's look at some ways income planning can help you save. Middle class typically earns money and pays taxes as they go. The rich, on the other hand, structure their income and assets to maximize savings. This doesn't mean breaking the rules, it means using them wisely. By learning from those who succeed, you can adopt similar strategies and improve your financial health. Let's compare how the middle class and the wealthy approach taxes. Structuring income is about more than just earning, it's about organizing your finances to take advantage of tax laws. This can involve setting up trusts, creating business entities, or investing in tax-advantaged accounts. The goal is to reduce your taxable income and keep more money in your pocket. Let's explore how structuring income works and why it's so effective. Tax deductions are one of the easiest ways to lower your tax bill. These are expenses you can subtract from your income, reducing the amount you owe. Common deductions include mortgage interest, charitable donations, and medical expenses. By keeping track of these costs and claiming them, you can save hundreds or even thousands each year. Let's review some popular deductions you might be missing. Tax credits are even better than deductions because they directly reduce the amount you owe. Credits are available for things like education, energy-efficient upgrades, and childcare. By understanding which credits you qualify for, you can lower your tax bill significantly. Let's break down how tax credits work and which ones you should look for. Contributing to retirement accounts like 401(k)s or IRAs can help you save on taxes. These accounts often let you defer taxes until you withdraw the money, meaning you pay less now and potentially less later. By planning your contributions, you can maximize your savings and build a secure future. Let's see how retirement accounts can be a powerful tax tool. Investing in real estate can offer unique tax benefits. You can deduct mortgage interest, property taxes, and even depreciation. These deductions can add up quickly, helping you save thousands each year. Real estate is not just about building wealth, it's about using the rules to your advantage. Let's explore how real estate investments can lower your tax bill. Choosing the right business entity can make a big difference in your taxes. Whether you're a sole proprietor, LLC, or corporation, each structure has its own tax advantages. By understanding the options and picking the best one for your situation, you can reduce your liability and increase your savings. Let's look at how business entities impact your taxes. Keeping track of your expenses is essential for maximizing deductions. Whether it's business costs, medical bills, or charitable donations, good records help you claim everything you're entitled to. Smart people use apps, spreadsheets, or professional help to stay organized. Let's see why tracking expenses is a key part of saving on taxes. Donating to charity not only helps others, it can help you save on taxes. Charitable contributions are often deductible, meaning you can subtract them from your income. By planning your giving and keeping receipts, you can maximize your savings while making a difference. Let's explore how charitable giving fits into your tax strategy. Medical expenses can be a big part of your budget, but they can also help you save on taxes. If your costs exceed a certain percentage of your income, you may be able to deduct them. This includes doctor visits, prescriptions, and even some treatments. By keeping good records, you can claim these deductions and reduce your tax bill. Education credits are available for students and parents. These credits can reduce your tax bill for tuition, books, and other expenses. By understanding which credits you qualify for, you can save money while investing in your future. Let's look at how education credits work and who can benefit. Making your home more energy efficient can earn you tax credits. Upgrades like solar panels, insulation, or energy-saving appliances often qualify. These credits help offset the cost and encourage you to go green. Let's see how energy-efficient upgrades can benefit your wallet and the environment. If you have children, you may qualify for tax credits and deductions related to childcare. These benefits can help cover the cost of daycare, babysitters, and other expenses. By claiming these credits, you can reduce your tax bill and support your family. Let's explore how childcare tax benefits work. Tax-advantaged accounts like HSAs and FSAs let you save money for health expenses while reducing your taxable income. These accounts are easy to set up and can make a big difference in your finances. By planning your contributions, you can maximize your savings and prepare for future costs. There are many tools available to help you plan your taxes. From apps and software to professional advisors, these resources can make tax planning easier and more effective. By using the right tools, you can stay organized and make smarter decisions. Let's look at some popular tax planning tools. Getting professional advice can help you make the most of tax rules. Accountants and tax advisors know the ins and outs of the system and can help you find savings you might miss on your own. Investing in expert help can pay off in the long run. Let's see why professional advice is worth considering. Many people make mistakes that cost them money, like missing deductions or credits. By staying informed and double-checking your returns, you can avoid these pitfalls. Smart tax planning is about paying attention to details and making sure you claim everything you're entitled to. Let's review some common mistakes and how to avoid them. Planning your taxes at the end of the year can help you maximize deductions and credits. By reviewing your finances and making strategic moves before December 31st, you can save more. This includes making charitable donations, contributing to retirement accounts, or paying certain expenses early. Let's see how year-end planning can boost your savings. Tax laws change frequently, and staying up to date is important. New rules can affect your deductions, credits, and overall tax bill. By keeping informed and adjusting your strategy, you can make sure you're always taking advantage of the latest opportunities. Let's discuss why staying updated matters. If you're self-employed, there are special tax rules and deductions you can use. From home office expenses to health insurance premiums, these benefits can add up. By understanding what's available and keeping good records, you can reduce your tax bill and keep more of your earnings. Having a side hustle can open up new tax opportunities. You can deduct expenses related to your work, such as supplies, advertising, or travel. By treating your side hustle like a business and tracking costs, you can save money and grow your income. There are several ways to file your taxes, from doing it yourself to hiring a professional. Each method has its pros and cons, and the right choice depends on your situation. By understanding your options, you can make filing easier and more accurate. Getting a bigger tax refund is possible with smart planning. By claiming all deductions and credits and filing accurately, you can maximize your refund. This means more money in your pocket to use for savings, investments, or expenses. Sum up: most people overpay taxes simply because they don't use the rules to their advantage. By learning about investments, business expenses, and income planning, you can start saving today. The difference between earning and structuring your money is huge, and it's the key to keeping more of what you earn. Stay tuned for more practical methods and tips in the next part. Take control of your finances and make tax rules work for you. Comment tax if you want part 2 with real